Hi ladies and gentlemen, welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good morning ladies and gentlemen, welcome on this beautiful morning. Today we're looking at reporting engagement, accounting offices and compilations, and the difference between the various kinds of assignments. Okay, let's look at our course outline for today. What is our goal today? We want you to understand with these different types of engagement, what is the common law, contract law, and statutory law when performing an engagement. There's a difference between the various engagement standards, and throughout the year we get a lot of questions on the technical website from SA Accounting Academy where we try and answer tickets. There's a lot of tickets, and we try and assist where possible, and we get a large amount of questions regarding companies, independent reviews, closed corporations, and the standards that are applicable. And that's why I say today, for some of you this might be an update. Not much has changed, but it's good to update yourself. Maybe you pick something up again. And for our new members and new people joining us, this is a heavy session. There's a lot of information, and it might take you some time to get to grips with everything. But this is a really valuable session from a practice perspective and a risk management perspective, and we're trying to add value as far as we can. Then we also look at the link between risk controls and the engagement approach, independence, as it's a very relevant ethical issue at this stage for each type of engagement and the considerations, and then how to accept, perform, and complete the different type of engagements. My experience in practice over time has been that we focus so hard on getting the financials right that we forget what we need to look at in terms of the standard. So when you look at an engagement, you're looking at the entire process, not only drafting the set of financial statements and having the tax return submitted. From the standards, it is clear that you need to manage the process through your entire firm and with your staff, or if you're a small practitioner, manage yourself to make sure that you comply with the quality standards. So those are our goals for today. Okay, so when we look at what we are doing, if we in any type of engagement, there's a need for quality financial statements. So the engagement standard gives us a guide, but there's also legislation that we need to look at. So what we're going to do is we're going to look at the scope of engagement and who's responsible for what. And there's a lot of questions coming through on independence and can I do this if I'm doing this? And a lot of people are asking me, but if I create one firm that does the compilation, can I create another firm who's signing off as the independent reviewer? Those kind of things we try and consider, and we get a lot of questions on them. And if you look through the legislation, it's not always clear, but you need to do the right thing and walk on the side of caution. There's a few relevant court cases that affect public opinion. And then we also look at Accountants and the Tax Administration Act in this section of the webinar. The first section of the webinar focuses on risk management, legislation, and basically the things that can go wrong if we don't do things right. But we need that background, so we ensure that we do things the right way. We look at a section on the Consumer Protection Act. We look at our responsibilities in terms of the Companies Act, our liabilities in terms of the Companies Act, and then the role of the accounting officer in the Closed Corporations Act. We get a lot of questions about the kind of engagement and the kind of report. So in this presentation today, we've got an appointment letter as an example. And once again, it's an example, you can change and edit it, but go back to the standards of your professional bodies. Most professional bodies have these examples on their websites, and they can add value. Reducing liability, a few key things in practice that we need to look at to reduce our liability and maintain our standards. And then we're going to have a look at the accounting officer specifically in terms of the engagement framework, We're going to touch on the engagement comparisons. We're going to touch on IFRS for SMMEs, and then accounting officers' role in other statutes. Also, if we can, we'll look at quality control, but quality control is covered in some of the sections. And ladies and gentlemen, don't be afraid of quality control. Quality control is very simple. You'll see the framework where we cover it in the slide. There's a few key areas we need to look at and we need to document and consider for ourselves. But we mustn't run away from quality control or fear quality control. It's just a basis to make sure our engagement is done on the right standard. Why do we need quality financial statements? We've got risk that we need to manage. We've got users. It's a stipulation of the Companies Act. It's a stipulation of the Tax Administration Act. And then very important for our profession is public opinion out there. Who are the users of our financial statements? We've got the owners and shareholders of a business. We've got the directors and managers, the employees. We've got finance providers. You've got, in instances where you're applying for accounts from companies, where your client is applying for facilities, they often ask for the financial statements, and there you've got a liability. And you can't necessarily limit the distribution of your financial statements. There's analysts looking at it, regulators, and then obviously the South African Revenue Service. So these are the users of our financial statements, and we often miss this. We draw up a set of financial statements for the purpose of determining the tax liability. The client wants to sort his tax liabilities out, and he's got his financial statements. But we need to consider who the users of our financial statements are. And that's part of your risk planning when you take on an assignment, to think, but if I do this, can I do this, and who will be using these financial statements? So in terms of the Companies Act, there's various sections that affect us directly, which stipulate what we need to do. It's Section 28, Section 29, Section 30, and then the offences in terms of Section 214. The Tax Administration Act, and you'll see the paragraphs in the Tax Administration Act are very closely aligned to the paragraphs in the Companies Act, but there you have to look at Section 29, the duty to keep records, Section 30, forms of records that need to be kept or retained, Section 31, the inspection of records, and then Section 241, due diligence that needs to be applied. Okay, recent scandals, Steinhoff, VBS, Bank, Tongaat, Hewlett, to name a few. I believe now with the situation our country is in, Corona, there's a few challenges facing some companies, and it'll be interesting times. So we as accountants have a responsibility towards the community, our clients, and towards the profession to ensure that we do things the right way. Okay, so let's look at a risk management framework. Now, I use the example to say, but when we look at an assignment, we often think, and I'm as guilty, I think, but which sets of financial statements do we need to get out this month on my work program? And I don't necessarily consider the framework in which I need to do it. We are professionals, and we need to write fees to pay the bills at the end of the month. So if we look at our risk management framework, we've got 3 tiers. Our top tier is ISQC1, the International Standard of Quality Control. And ladies and gentlemen, like I say, we don't have to be afraid of this standard of quality control. It gives us good guidelines about the things we need to consider and to document in terms of quality control. Then in the middle tier, we're looking at the relevant standard, the audit or accounting standard that we need to apply in our assignment. And at the bottom tier, we are looking at the physical assignment performance. So a lot of us are very strong on the assignment performance, and you can agree or disagree with me on that, because it takes time to comply with the middle tier and the top tier, and we are not always rewarded for the time we spent on the top tier and the middle tier And the clients don't understand if we say to them, but look, we need to do quality control, or we need to make sure that we conform with the standards, although it's a requirement, but clients only see the end product. And it's a process we need to manage. In a competitive market, we need to manage it and make sure that our work is up to standard.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.